We've actually got some red on the screen. Nothing dramatic, down 0.25%, but I'll take it. It's a nice relief. We are past the meat of the earnings season, of course. We've got dribbles and drabbles here and there. Palantir will be coming out this afternoon. And the Fed has their shindig on Wednesday. So there's a little going on this week, but fairly quiet day. Let's jump into the charts. We begin with the spider. Now, there's going to be a general theme, and I'm seeing this all over the place. And I don't have an eloquent way to say this, so I'll just do my best. The theme is there might be still room to run without completely dashing all bearish hopes, in as much as the peak from this high here, the late March 25, 26, that peak is still intact. So right now, on the whole, we are below last Friday's high. We're a little bit weak right now. It could still keep going up. And I don't want it to, but if it does keep going up, the only real failure comes if and when we cross above the dashed line that are drawn all over the place. So I'm still not getting aggressive. For my own self, my commitment level is about 78%. And all I mean by that is like, how much cash am I using, and how much margin am I using? So I'm using 78% cash and 0 margin. So about half of if I was really going for it. I do not feel like going for it after the past couple of weeks. Plus, there is that risk of that pop higher. I really want to see this start to show clear signs of another top, another lower high. As it is now, is anybody's guess. Even minute to minute, it's like, oh, it's starting to weaken a little bit. No, it's not. It keeps doing that. So yeah, I'm staying cautious right now, 78%. And I want to really know that we've got some upside down V that's hammered itself out that we can count on as a stop loss level. As it is now, no, the stop loss level is way up in the late March peaks, and that's too far away from me. The diamonds have a little clarity here in as much as they're getting very, very close to their gap. The YM futures have been green most of the day, as opposed to the NQ, the ES, the RTY, all red. But the diamonds, their gap's at 415.97. A few minutes ago, I entered a big old short position on the diamonds with a stop at 416. Simple, clean, simple, low risk. So yeah, IWM, the small caps. Now this is a great example of the kind of thing which I could convince myself to like really do an aggressive short on this, but I don't want to, because the level that it might cross that would show that it was a mistake it's a little high for my liking. I mean, strictly speaking, this red line up here is the real raise the white flag surrender for the bears, and that's a long way off. There's another medium important one down here, 203.33, which is this peak back on Liberation Day, April 2, before the poster board came out. So here again, we've got this white space here of risk, and then this big white space here of risk. I don't want to do it. As pretty as that topping pattern is from a much greater distance. It's like Dana Carvey's George Bush, not going to do it. Wouldn't be prudent. Here's the cubes, down big old 0.25%. That's really the most we can get these days. In this instance, the Friday peak was still below the peak of the 25th. I've dragged this line down, anchored to Friday's peak with the nascent hope that, that's all we go. But if we do cross above that, the real surrender level's up there at the 25th. But we'll keep it down here for now. And you can see, and this is pretty true across the board, we opened rather weak and are trading relatively strong right now. Yeah, we're still down a little bitty bit, but when we opened, we were down like 1%, and now we're down like 0.25%. So it has been fighting back all day. And speaking of fighting back, this was a big fight back. Netflix, our president, who keeps changing what he's going to tariff. I'm going to tariff this. Oh, no, I'm not. I'm going to tariff this. No, I'm not. I'm going to tariff this. No, I'm not. The latest one is movies, foreign movies, because, let's face it, with $37 trillion in debt and all the problems we've got, what it really boils down to is overseas movies. That's the heart of the problem. So we're getting our arms around those big issues, and we're going to tax, the next remains of the day, the sequel of that. Get those Ivory Merchant films out. And so Netflix freaked out because it's like production outside the U.S. going to have 100% tariff. Netflix opened up really weak, but it seems, as you can tell, that the old credibility ain't so hot because it's been fighting back all day. Netflix is down, 1.4% in the face of what should be kind of wretched news, just below its lifetime high. Yeah, like I said, it's like the boy who cried tariff. So this morning it's like, oh my God, it's like, no, in 2 days he'll rescind it. Don't worry about it. So Netflix isn't too worried. XLF financials. Here we have, it is not super clear, this pattern, but I've anchored this to Friday's high. We've got this big peak here and then a higher peak here, a lower peak here. I'm not going to favor this with a name. There's this is called a mess pattern. There's nothing here, but I am simply anchoring this to Friday's high just because keep hoping against hope that last Friday's high was the end of this counter trend nonsense. A good example in the financial world of the kind of bounce we're seeing that might be exhausting itself is Bank of America BAC. This is simply anchored to the Liberation Day high, and we're very, very close to that. But these are all like maybes and couldas and so forth. It's my confidence in the clarity of this really took a hit the past couple of weeks, which is why instead of being 160% committed, I'm like over here holding my hat at 78%, kind of taking it safe, preserve the capital. Duolingo, which had a fantastic couple of months, is at a lifetime high again. This is up 1.5%, approaching $500. Guess we're all going to learn second languages now, but this has been a tremendous success story. A little bit of a upside down version, in contrast to that, is something which is weakening, which continues to be our friend Pepsi. And this is a big dome pattern, this multi-year top I pointed out some weeks ago. And it's nothing dramatic. This is they sell sugared water. It's not a big deal, but it's slowly working its way lower. And so this is another positive step for the Pepsi bears out there. So far, so good. Now, with all the red on the screen, our old friend gold is at it again. It's having a great day. Here's GLD, is up over 3%. That's cool. It's got some work to do, though, because the lifetime high was back here, back on the 22nd of April. It's got to conquer this 310.36 level to really prove itself. That was an island reversal gap. Longtime viewers know I'm a big fan of precious metals, gold in particular. I cheer its ascent. Maybe with the Fed's nonsense on Wednesday, it'll blast past those former lifetime highs and make a new lifetime high. But I'm not showing it to you today, but over and over again, I've shown that ratio chart of the all world equities divided by gold. And it's this massive top, which looks like it's ready to plunge into the oblivion, which means either gold's going to go up, equities are going to go down, or my favorite version, both. So that's the ratio chart at work. So gold, the front month's up almost $100 now. It's right now. So yay, gold. The miners are doing pretty good too, naturally. GDX is up around 3.5%. This isn't an island reversal gap, but it is a gap, though, at 50.02. That's got to be conquered as well. But hats off to the precious metals out there. One thing, as tough as the past couple of weeks has been for the bears, the one area, the one sector that continues to do well and has muscled through all this has been oil. And we got more good news over the weekend that they're going to ramp up production. OPEC's going to crank up production. So that's sent crude futures down immediately. And USO here is down 2.36%. So as you can see, in the face of surging equities, good old oil has been weakening away. And so we can see I am short XOP. So this is down about 1.4%. I've got this line anchored at 115.13. I violated that by 3 pennies on Friday. That's okay between friends. XLE down 1 2/3%. And good. And I've got some individual items which are doing nicely. We've talked about this one's not too dramatic, but BHP down more than 0.25%. COP, ConocoPhillips, a good day on this one, down 3 2/3% below this very nice topping pattern. Schlumberger down over 2%, like so. And one last one, FANG. You've heard that a lot. Diamondback Energy down about 2 1/3% under that right triangle pattern. So energy's going well. Bonds not doing so great. TLT. I haven't traded bonds in a long time, but with the Fed coming up, interest rates are going up and up and up. The politicians want Jerome to cut rates just because, not because it makes economic sense, because it makes for good political theater. I don't think it's going to happen, but bonds continue to weaken, as does XLU by a little bit. I don't trust this critter anymore. I've been burned by it too many times, but so long as it stays under 80.21, this looks prone to a slip as well. Over in Bitcoin land, a few $1,000s shaved off. This had a tremendous run, got to around 77,000, blasted all the way up to almost 98,000. Folks are talking about six figures again. Didn't happen. It turned tail a little bit. It's a messy pattern, but this overhead supply is still intact. Naturally, MicroStrategy, I got to train myself. It's just called Strategy now, in spite of the ticker symbol. Strategy is down a bit more than 1%. But other public companies that have made kind of a stake in the ground as being like Bitcoin miners or tied closely to Bitcoin have not done nearly as well as Strategy has. Michael Saylor, here's Riot, for example, down today alone over 5%. And of course, as you can see, unlike Strategy, has not had the kind of performance. And then Marathon Digital Holdings down almost 9%, even though Bitcoin's not down that terribly. But anyway, the belle of the ball is going to be Palantir. Here we have it. I think on an intraday basis has sneaked over to lifetime highs. The PE ain't cheap. It's almost 700 on the PE, but things like this, it doesn't tend to matter. I have no position. I wouldn't dream of having a position in this myself, but I'll be watching with great interest because this is just one of those household name stocks that plays into the psyche of the market pretty strongly. But I know some of you do, so good luck out there. And as I say, the big event this week, Wednesday with the Fed,